In an unprecedented surge, U.S. spot Ethereum ETFs attracted over $1 billion in capital in just one day. This record-breaking inflow reflects a significant shift in institutional interest toward Ethereum, challenging Bitcoin's dominance in the cryptocurrency market. Looking ahead, the critical question is whether the recent influx of ETF capital will continue. This surge in interest has been largely driven by institutional investors who are increasingly recognizing Ethereum's potential as a robust digital asset. In recent months, Ethereum has gained traction not only as a platform for decentralized finance and non-fungible tokens, but also as a viable investment alternative to Bitcoin. If institutional inflows persist, Ethereum could maintain its upward momentum, potentially outperforming Bitcoin and drawing further interest from traders and allocators alike. Conversely, if these inflows begin to dwindle, the recent price surge could quickly lose steam, leading to increased volatility. Investors should closely monitor daily ETF flow data, as well as Ethereum's ability to break and hold above its previous highs. A sustained increase in ETF investments could signal growing confidence in Ethereum's long-term value proposition. Additionally, the performance of altcoins in response to Ethereum's movements will be a significant indicator of market sentiment. Should Ethereum demonstrate resilience, it may embolden other altcoins to rally, creating a broader market uplift. As we move forward, the question remains: will Ethereum solidify its position as a leading asset in the cryptocurrency market, or will it falter under the weight of previous highs? The potential for regulatory clarity around ETFs could also play a pivotal role in shaping market dynamics. With the cryptocurrency landscape evolving rapidly, Ethereum's adaptability and technological advancements will be critical in determining its future. Investors and analysts alike will be keenly focused on Ethereum's next moves, as its trajectory could redefine the contours of the crypto market. Expect clarity and decisive trends to emerge in the coming weeks, influencing both institutional and retail investment strategies. The rise of Ethereum's institutional inflow is a culmination of several converging factors. Over recent months, confidence in Ethereum has steadily grown as it establishes itself as a primary settlement layer for stablecoins and tokenized assets. This confidence has been bolstered by Ethereum's impressive price performance, with substantial gains attracting heightened investor interest. Notably, Ethereum has witnessed a considerable increase in its market share, reflecting a notable shift in how institutional investors perceive digital assets. The broader improvement in risk appetite across crypto markets has encouraged institutional players to seek alternative assets with significant upside potential. The backdrop of a rising fear and greed index and a sharp increase in the total cryptocurrency market capitalization has also contributed to this shift. Historically, Ethereum has often played second fiddle to Bitcoin, but this latest inflow suggests a pivotal change in market sentiment, with investors recognizing Ethereum's potential as a valuable asset class. This shift indicates a growing acceptance of decentralized finance, DeFi, and non-fungible tokens, NFTs, both of which heavily rely on Ethereum's blockchain capabilities. As institutional investors increasingly allocate funds toward Ethereum, this could lead to greater liquidity and stability within the market. The potential for Ethereum to become a leading platform for innovation in the financial sector cannot be understated, as its applications extend beyond mere currency transactions to complex financial instruments. Looking ahead, it is likely that this trend of institutional investment will continue to gain momentum, with more players entering the Ethereum ecosystem. This influx of capital could catalyze further technological advancements, encouraging regulatory clarity that fosters a robust environment for sustained growth. As Ethereum solidifies its position, we may witness transformative developments in the digital asset landscape, reaffirming its role as a cornerstone of the cryptocurrency market. The recent record inflow of $1 billion daily into Ethereum exchange-traded funds, ETFs, marks a pivotal moment in the cryptocurrency landscape. This substantial capital influx is one of the clearest indicators of institutional appetite for Ethereum, a trend that underscores a growing confidence among major financial players in the cryptocurrency sector. Historically, institutions have approached digital assets with caution, often wary of their volatility and regulatory uncertainties. However, this shift in sentiment reveals a transformation as institutions increasingly seek regulated products to gain exposure to Ethereum's robust ecosystem. The context of this development is critical. Ethereum, known for its smart contract functionality, has long been regarded as a foundational layer for decentralized finance, DeFi, and non-fungible tokens, NFTs. With its unique ability to facilitate complex transactions and applications, Ethereum has attracted significant developer interest and innovation. Ongoing upgrades to its network, such as the transition to a proof-of-stake consensus mechanism, have further enhanced its appeal among investors, promising improved scalability and reduced energy consumption. The introduction of Ethereum ETFs has made it easier for traditional investors to participate in this growing market without the need for direct cryptocurrency ownership. This ease of access is vital for mainstream adoption, positioning Ethereum not just as a speculative asset, but as a legitimate investment vehicle that can fit into diversified portfolios. The impact of this inflow is multifaceted and profound. For one, it signals a potential capital rotation, where investors may shift focus from Bitcoin to Ethereum, seeking higher returns in an increasingly competitive landscape. Such a shift could lead to a reevaluation of Ethereum's market position, potentially driving its price higher as demand swells. Furthermore, this influx could enhance overall sentiment across altcoins, fostering a more robust cryptocurrency market. Individual investors may also benefit, as a stronger Ethereum price can create a ripple effect, boosting confidence in other digital assets. Looking ahead, the outlook for Ethereum appears promising. With institutional support solidifying, Ethereum is likely to enter a critical phase of price discovery, recalibrating its valuation amid heightened interest. As it continues to serve as the backbone for stablecoins and tokenized assets, Ethereum could emerge as a cornerstone of the evolving financial landscape. On May 21, 2026, U.S. spot Ethereum ETFs experienced a historic inflow, pulling in more than $1 billion in fresh investments within a single day. This remarkable event marks the largest daily ETF inflow on record for Ethereum, positioning total ETF assets above the $10 billion threshold. The surge in capital coincides with a notable performance from Ethereum, which has exhibited substantial growth, showing gains of approximately 29% over the past week and an impressive 54% over the last month. The recent performance of Ethereum has been attributed to various factors, including advancements in its underlying technology, increased adoption of decentralized finance (DeFi) applications, and growing institutional interest. While Bitcoin also made headlines by briefly reaching $122,800, the Ethereum ETF inflow stands out as a more consequential indicator of institutional demand. This influx of capital signals a clear shift in the market, with institutional investors showing increased confidence in Ethereum beyond their traditional focus on Bitcoin. The development is particularly significant given that Ethereum's transition to a proof-of-stake model has improved its sustainability profile, attracting environmentally conscious investors. Unlike previous inflows that were often tethered to Bitcoin, this event highlights a diversification of interest among institutional players, suggesting that Ethereum may be entering a new phase of price discovery driven by structural demand. The implications of this surge are profound, as it indicates a maturing cryptocurrency market where investors are recognizing the potential of Ethereum as a viable asset class. This shift may lead to increased liquidity and stability for Ethereum, further enhancing its attractiveness to both retail and institutional investors. Analysts suggest that this trend could catalyze more innovative financial products tied to Ethereum, expanding its use cases and driving further adoption. Looking ahead, the continued influx of institutional capital into Ethereum may pave the way for further price appreciation, potentially positioning it as a strong competitor to Bitcoin. As institutional interest grows, Ethereum could solidify its status not just as a digital currency, but as a cornerstone of the evolving financial ecosystem. Investors and analysts alike will be keenly observing how this trend develops in the coming weeks and months, particularly as regulatory clarity around cryptocurrency continues to evolve. As we analyze Ethereum's potential trajectory, what do you think will happen next? Will these institutional inflows sustain the momentum? Share your predictions in the comments, and don't forget to subscribe for daily deep dives.